Welcome to our today's video necessitated by a message or a feedback that we got from Kajes Wa Deliveries, a difficult name. If I quote from this comment from Kajes Wa Deliveries, he says that or he denotes that many people believe, or there are those investors who would potentially believe that the top 10 money market funds, which this channel deliberately has done quite a lot of content videos about, are more riskier compared to the money market funds or the fund managers who have been in the market for quite some time. And for that reason, such investors go for those fund managers, although they rank lower compared to the top 10 money market funds when we rank them by their performance. And for that reason, he requests we do another video about the interest rates of the top 10 money market funds and the lower fund managers. And for this purpose, I've chosen we review the money market fund by the largest fund manager by market share, and that is CIC Money Market Fund. Although CIC has a Kenyan currency denominated money market fund and a US dollar denominated money market fund, for this purpose, we are looking at the CIC Kenya shilling money market fund. CIC controls all the asset under management under this fund manager stands at 63.78 billion. And the money market fund, that is the CIC money market fund, has delivered an annualized rate of 11.99%, perhaps just about 12%. But compared to our top 7 money market funds, those funds have delivered in the tunes of 17%, 16%, 15%, and 14%. Looking at that difference in rate, and as it shall be confirmed when we look at the fund profiles of the top 10 as we had earlier looked at, and the fund profile of the CIC money market fund, that difference could be emanating not only by the size of the assets under management, but also the benchmarking of the return. A good example, Ethica Money Market Fund benchmarks its return to its investors on the 91-day Treasury bill plus 1%. We'll be looking at the CIC Money Market Fund shortly, and one of the things that you will note is that it benchmarks on the 91-day Treasury bill. So there is that difference, a plus 1% that Ethica gives to its customers compared to this one. And potentially, among other things, that would be part of the difference and not basically about risk exposures. In order for us to ward off that fear, the question of risk in general about the fund management, its regulation, and allocation of its assets, because it will only give us a higher risk with the top 10 money market funds if those fund managers were exposing the funds into risk in investment or in allocating into risky assets. But as we shall be looking at the asset allocation schedule of the CIC money market fund, comparing with what we have so far looked at as the asset allocation schedules for the top 5 money market fund, you realize that there is no much difference, or there is no difference at all. And therefore, that peddled fear of risk will not be based on the asset allocations, but there are potentially other scopes that can bring out other elements of risk, but not the categorization of risks under money market funds, because all money market funds are categorized as low risks so long as they enjoy regulation and registration by the Capital Markets Authority and they stick with the regulators' requirements as to the custodians, the trustees, and the auditors, which is the investment ecosystem. We'll be looking at the fund profile and the asset allocation after 3 seconds short break. So don't go. In the meantime, give us a like to the video and engage us in the comment section. See you after 3 seconds short break. Welcome back, and this schedule is the CIC's Kenya Shilling Money Market Fund profile. The fund type is a collective investment scheme, and as we all know that means that this fund collects investor money from different people and puts it together. Then the fund manager distributes or allocates those assets in various short-term assets as investments. The fund currency is dominated in Kenya shillings, and the fund manager is a CIC asset managers. The custodian in this case is the Cooperative Bank of Kenya, while the trustee is Kenya Commercial Bank. The auditors for the fund is PricewaterhouseCoopers, and the risk profile for all money market funds in that case is low. The minimum investment into CIC money market fund is 5,000 Kenya shillings and top-ups of 1,000 shillings. This fund commenced in June 2011, and the management fee annualized is 2%. The total assets under management stand at 73.78 billion. While for purposes of your interest and the capital growth, your interest is earned on a daily basis, calculated on a daily basis, but it's distributed into your account on a monthly basis. That is to mean that this fund compounds on a monthly basis and not a daily basis. And the benchmark rate for this fund is the 91-day treasury bill, while there are no initial investment fees. Considering the message or the question by Kajes or deliveries, which resulted to creation of this video, you will notice that there is nothing different in terms of fund profiles when you compare this fund profile with the likes of Lofty Carbon, with the likes of Cyton, with the likes of Etica, and the other in the top 10 list. Then now we move to look at the asset allocation schedule for the CIC Money Market Fund. This schedule shows the asset allocations by the CIC Money Market Fund manager. And from it, it's clear that the fund manager has allocated to government securities, those are treasury bonds and treasury bills, are hoping 40% or 39.35%. Then fixed deposits have received 59.14%. So over 50%, and to be precise, 60% of the asset under management, that is the hoping 63.78%, as 60% of that amount has been invested in fixed deposits. That reminds me of Lofty Carbon Money Market Fund, which assumed in its asset allocation reflected a 90% allocation of its money market fund to fixed deposits. Then we have demand deposits that received 1.42%, and lastly our corporate papers, that is the commercial papers and corporate bonds, which received a 0.09% of the fund, and that is not a small amount. 0.01% of 63.78 billion is a substantial amount. But the most important is looking at this asset allocation schedule and comparing it with the asset allocation schedules that we have reviewed for the top 10 money market funds that we have done so far. You realize there is actually no corporates. Money market funds become suitable for investors who are looking for capital preservation, investors who are looking for opportunities for their short-term goals, including parking points for their cash as they look for higher leveraging opportunities. Investors who do not look forward to long-term capital growth and capital stability. That said, if you look on the other side on what you need for you to access a money market fund account, the documentation or the KYC requirements are more or less the same. You need your national ID card or your passport. You need your KRI PIN. You will need a passport. And in most cases for the online platform, the web-based or the app-based platforms, a selfie would still work. We also need a proof of owning a bank account. You either give a check, cancelled check, the image. You can also use the image of your ATM card, or sometimes others will ask for your bank statement. So closely looking at the two reviews of a money market fund in the top 10 category and comparing it with the largest fund by market share, you will notice there is no much difference. Then in the next video, maybe will now be narrowed down to then what could be the reasons why the larger fund managers give a lower return compared to the newer fund managers in the market, or comparing the returns that are given by the top 10 fund managers and the returns that we are getting for the larger fund managers who are assuming the lower position. Thank you for watching and see you in the next video.